Hello everyone, I extend a warm welcome to this 12-week course on financial statement analysis and forecasting, which is going to cater to the academic needs of undergraduate, postgraduate, management professionals and the practitioners in tandem who are directly or indirectly having the responsibility to execute financial decisions related to different facets of finance. This particular course is going to accommodate different techniques of financial statement analysis, as well as it facilitates getting into the world of unknowns through the forecasting issues related to financial information, which is a prerequisite to financial decision making process. So, I welcome you all to this 12-week session on financial statement analysis. Now, to start with, the lecture 1 is going to introduce with regard to the preambles of financial statement analysis. In the financial ecosystem, and that too at the backdrop of the changes which are getting witnessed in the financial world in terms of extending financial services, in terms of introducing different financial instruments, in terms of delving with regard to different new ways and competitive practices adopted by the corporate world in general, it is imperative on the part of different stakeholders who are directly or indirectly related to the financial ecosystem to arrive at decisions that are going to be holistic and rational in its approach. To start with, when we are talking about financial statement analysis, it is serving as a precursor to the financial decision making in a holistic and rational manner. Though it is very difficult to ensure that all the financial decisions are going to be rational and going to accommodate all the facets or the variables which are having an influence on the financial decisions related to the world of uncertainties, it is imperative to start with a legitimate analysis of financial information which are embedded in the financial statements disclosed by different financial institutions as well as body corporates in order to disseminate what they are doing in terms of financial terms. At the same time, it is also essential to read between the lines, because the information which are provided in the financial statement, they are more or less backed by financial jargons which are rather not easy to unfold and deduce any information which are at the back of any financial variable or financial item which is disclosed in the financial statements. So, it is imperative on the part of the users of financial information to go for a financial statement analysis with the very objective of taking decisions that are going to be cogent and pertinent, and finally it is going to contribute towards the accomplishment of the overall objective of the business in general. Moving further, when you are going to talk about financial statement analysis, there are different purposes which are served through the analysis of financial statement, and all these purposes are to certain extent customized, and at the same time they are also generic in nature. Say for example, when you are going to talk about the shareholders, they are backed by a very specific objective of reading the potential for the investment horizon. Whenever they are talking about the use of financial information which are given in the financial statements extended as a practice of disclosure, they are there to ensure whether the company is able to generate the same profit or not down the line in the future in compliance with their window period of investment. Because before committing their capital, they are essentially more interested rather into the profit making ability of the company rather than what the company has done or is doing right now, because they are committing funds right now and they are more interested to delve into the future profitability of that company. So, for example, when you are going to take into different stakeholders, Might be investor, might be government, might be the potential managers, might be the competitors, might be the suppliers, might be the providers of capital, might be the employees of the organization, whosoever they may be. They are backed by different objectives. They are backed by different approaches in order to serve their specific interest, and that is going to lead to them to take financial decisions properly. So here I am going to discuss some of the fundamental objectives which are going to be served through financial statement analysis. To start with, it is appraisal of financial health. This is one of the fundamental objective of financial statement analysis through different techniques and tools which are available in the financial literature. It facilitates an overall analysis of financial well-being and financial health of a particular company, either on a one-time orientation or over a period of time, either by taking a cross-section or by taking a time series orientation. At the same time, when you are going to talk about financial health, it is an umbrella term. Financial health delves into different sub-dimensions of a company, because when we are talking about financial health, we are there indirectly accommodating all the functions which are getting executed in a business as a whole, with the very essence that each and every business is backed by the objective of maximization of their shareholders' wealth, and at the same time they are there to ensure their long run sustainability. So when you are talking about financial health, we are not only talking about profit or profitability, rather we are moving further and we are going to talk about the long run sustainability, which is a combination of generating equitable profit by considering all the stakeholders of the society. Delving into the second one, financial statement analysis facilitates decision making for investors. Just in the introductory part I said, when we are talking about investors, they are more or less taking the financial information as the preamble to execute different decisions which are going to serve their financial objective. And for that, the investors are using the past information as financial repository. They are trying to read the present, and they are rather more interested to delve into the future states of affairs of the same company when they are into the process of selecting different companies within their portfolio in order to execute their investment decisions. Coming to the third point, financial statement analysis also facilitates accessing business performance, because when you are going to talk about business performance, it accommodates all the functionalities of business. And in financial term, when we say business performance, we are more or less talking about what is the return on the capital committed in a particular company in all its different forms of resources. And when we are going to talk about the return on capital employed or return on investment, indirectly we are into the process of evaluating the overall business as a whole by considering the financial information provided in the financial statement and other subsidiary documents as disclosures related to a particular company. In the same manner, it also facilitates affluence for financiers, because whether it is a bank or it is a financial institution, when they are getting a project proposal from the company side, they are rather more interested to take a rational decision which is going to serve their purpose, because when they are going to appraise one of the application filed by any company who is asking for, let us say, 500 crores of capital to be repayable in a span of 20 years from now, and the company has submitted different documents to suffice his application for sanction of a loan. But we all know that the financial information provided by the companies, they are not free from manipulations. There is heavy element of window dressing. There is heavy element of non-compliances in a very shrewd manner. There is heavy element of selective disclosures. there is heavy element of manipulations, there is heavy element of intentional distortions in different financial information. So, when we are in a state to appraise the financial health before taking the decision whether to sanction finance or not, we rather have no choice but to unfold all those intricacies which are there imbibed in all these activities, and it is indirectly all the actions which are intentionally executed to distort the financial decision making process and to serve the vested objective. Moving further, the financial statement analysis also facilitates strategic planning for management, because in this age of competition, when we know that the practical world is in a state of oligopoly, all the peers with whom the companies are competing, they are not going to be silent with the action or the policy executed by one peer. Rather, they are there to be responsive and they are there to be reactive while they are taking care of their own companies. So, when we are talking about competition and the competitive strategies which are adopted by different competitors in the corporate world, we have no choice but to devise strategies to win over others, and financial statement analysis serves the backbone of framing different strategies in lieu of financial states of affairs. Moving further, financial statement analysis also diagnoses whether the financial information provided and disclosed by different body corporates are in compliance with the regulatory framework issued by different regulating agencies, whether it is in a domestic front or it is in the transnational front. One has to ensure that all the financial information that has been disclosed in lieu of different financial documents, they are more or less in compliance with the framework which is mandatory on the part of the companies to go for. Then moving further, it also enhances communication with the stakeholders, because those who are internal stakeholders, it is okay, they are getting access to their financial information. But when we are talking about external stakeholders, external users of financial information, they didn't get direct access. So, they are only getting closer what is happening in the business, what is happening in the company through the financial statements. And as I had already said, the financial statements framed and published by body corporates, they are not free from adversarials. So, when we are talking about a communication between the company and the external stakeholders, it is the financial statement analysis which facilitates it properly. Then the last objective is accessing future performance. As I said, financial statement analysis facilitates reading the future in a better way and in a unbiased manner, because mostly when we are talking about future, we are into the probabilistic world. Irrespective of the fact that we are into the probabilistic world, we are having no choice but to make it as possible as likely when we are talking about the future of the body corporates. Moving further, when you are going to have a financial statement analysis, what are the pragmatic outcomes? In what way it is going to serve the very purpose of different users of financial statements? Here I have jotted down some of the formidable outcomes. The first one is exploration of financial well-being, because the very essence of financial statement analysis is to explore the strengths, the weaknesses, the opportunities and threats pertaining to the companies, which is in totality represents the financial well-being. So, we are there to make use of different tools and techniques of financial statement analysis in order to delve into the strengths, the weaknesses, the opportunities as well as the threats which are witnessed and imbibed in the companies. Because mostly when you are talking about financial statements, no companies would like to disclose their weaknesses in a straight orientation. Rather, they are trying their best, they are thriving their best to shackle and to restrict all those informations which are detrimental for their financial well-being. So, it is imperative on the part of the users of financial information to dig out all those weaknesses, to dig out all those challenges when they are getting into the financial statements and using those financial statements for the purpose of decision making. Moving further, when we are talking about the profit potential, because mostly this is the issue which the bankers, the potential investors, the customers, even the suppliers, they are more inclined to know, though the company is making good profit at present, the company had a very glorious history, but what about the future potential of the companies? Unless and otherwise, these users of financial information, they are coming to the conclusion, they are having the assertion that the company's profit potential down the line in the future span of time is going to be maintained what it is at present, and at the same time it is going to grow over the period of time, then they can only be attracted towards that company. Otherwise, it is very difficult on the part of the investor to pick a company which is having profit, but the potential to generate profit is in a declining state. Similarly, is the financial institutions and the bankers who are more interested to appraise the profit potential, because that is indirectly a mirror image of the quantum of revenue which is net of expenses generated in a business. So, in that context, when you are going to talk about the appraisal of profit potential, rather it is one of the most sensitive outcome of financial statement analysis, because with the use of different techniques like related to profitability ratios, related to overall profitability ratios, related to market based profitability ratios, it facilitates the appraisal of profit making potential, and at the same time there are different models which are based on ratios and financial matrices which can also facilitate the exploration of the potential to generate profit. Then the third one is disclosure of operational agility. Now it is the time, it is the information. Whosoever is in a position to disseminate the information which are positive and favorable in lieu of a company, they are going to win the race. Now here there is a requirement of smartness and promptness with regard to dissemination of information pertaining to the operational states of affairs of a company, and the analysis of financial statement through different techniques is going to facilitate the exploration of whether a particular company is operationally agile or it is stubborn or slow in terms of responding to different vulnerable conditions of the business environment. Then moving further, when you are going to talk about elevation of liquidity and sustainability. Now, when you are talking about the liquidity and sustainability, in one hand we are talking about the near future, which is a proxy of liquidity, and on the other hand we are talking about the sustainability, which is talking about the far future, because the sustainability is not only considering the financial profit making potential, rather it is also considering the contribution from the point of view of companies towards the society, towards the environment, towards the general community. And at the same time, when you are going to club all these things, like there are cutting edge tools pertaining to sustainability, like we are talking about economic, social and environmental disclosures, though in different countries there exist different extent and magnitude of disclosure towards sustainable and sustainability issues, but at the same time the financial statement analysis and its extended version is going to handle the issue of sustainable analysis of a body corporate as and when the information pertaining to sustainability as well as the information pertaining to the short future is made available through the disclosure of information in financial statement in a mandatory orientation and at the same time in a voluntary orientation, because most of the sustainability disclosures are finding a place in the voluntary disclosure. There are very few countries who have now made it mandatory on the part of the body corporates to make these disclosures mandatory for all the companies. Moving further, when we are going to wind up, why financial statement analysis? As I said, it is going to serve the very purpose of taking financial decisions rationally, taking financial decisions in an unbiased manner, taking financial decisions in a way which is going to serve their very interest. And financial statement is that document which provides information with regard to what is happening in the business in terms of different functionalities, may it be marketing, may it be production, may it be administration, may it be R&D, may it be accounting, may it be finance. They are all expressed in terms of money and they are all accumulated and aggregated in different financial statements like the income statement, the balance sheet, then the cash flow statement, the funds flow statement, whatever financial statements are prepared and disclosed by the company, they are backed by the very practice of disclosing only the favorable issues, and they are thriving their best to suppress all those things which are unfavorable to them, and that leads to different adversarials to financial statement analysis, and that will be delving later on. But at the present time, when you are going to talk about an introductory or prologue to financial statement analysis, it is having immense contribution in terms of exploring and reading between the lines and unfolding the intricacies and intermingled issues which are having a causal relationship among different financial variables in order to read those intricacies, and based on the assertions and conclusions, different stakeholders are there to execute their decision makings in a non-biased and free way so that they will be able to comply with their very objectives. But at the same time, there is a contention. When the users community of the information, they are inclined to have most of the information in the best possible way, but on the other hand, the companies are thriving their best not to disclose those informations which are unfavorable to them. So there is a contention. Now one need to harmonize this particular contention, because unless and otherwise the providers of financial information will be genuine enough to disclose and disseminate their financial information, somewhere or the other the users of financial information is at crossroads, because that solves the very essence of taking financial decisions in a pragmatic way. But if the input data is going to be not proper, it is manipulated, it is misrepresented, then all the decisions based on those input data which are going to be used by different stakeholders cannot end up in a state of rational and proper decisions. So that is why when we are talking about financial statement analysis, we are there to see to the fact that the providers of financial information are there to disclose and comply with the rules and regulations, the standards which are governing their statement preparation, and at the same time they are there to extend wider coverage and they are there to try their level best to encompass most of the critical aspects which are going to have a bearing on the financial decision making process and the objectives which are varied so far as the users communities are concerned. In that context, this particular subject on financial statement analysis and forecasting, which is going to span over 12 weeks span of time, is going to serve the purpose of reading and unfolding the intricacies of financial statements, cash flow statement, funds flow statement, income statements, balance sheets and any other related documents which are disseminating cogent information about the financial states of affairs of a business per se. Thank you.